watching his lending business grow in addition to the real estate. So he's going to be talking to us about private money, lending money, borrowing money.
What's up with closing in 3 days? Like what's happening? So understanding the story helps a little bit because
deploy that money and get a good stable return, and then we can provide that for them, and then the other side.
Hello. Thanks for coming out, guys. This is our third time doing a monthly event. It hasn't been perfectly monthly. We didn't have an event last month, but this month we have a great event. We have both Alex Martyn, who is a friend of mine. How long ago did we meet? I don't know, 5-6 years ago, something like that.
Yeah.
And it's been really cool to see Alex grow and do a bunch of different projects and stuff along the way. And now he has also done recently a loan for a fix and flip that we did, and watching his lending business grow in addition to the real estate portfolio and the flips and everything is really cool. So he's going to be talking to us about private money, lending money, borrowing money, doing projects, what that means, how to maybe raise money from other people. You can go into a little bit. We'll do some Q&A at the end. And we also have Gary Brown, who we go way back also, right? Another 5 years or something like that.
Yeah.
And Gary did acquisitions for a long time, so he understands everything there is to know about the business of not just wholesale, but fix and flip and rentals and everything in between. And how long have you been brokering loans now?
I'll be doing this for 2.5 years, so
2.5
a good amount of time to say I got some deals under my. Yeah, I know.
Yeah, jeez.
That's fantastic.
Yeah.
And Gary is also TikTok famous. Yes. I envy him very much. I don't know how he's done it, but he generates a lot of business from TikTok, which I think is really cool in a lot of ways. Yeah. So gonna turn it over to you first, Alex, if you want to go a little bit into how you started in lending from that side of the equation. Just take it from there.
Sure. So the way that I started lending was basically, I have a partner, Josh, who's in the audience right there, and we own a portfolio of properties in the Coatesville area that, we were looking to grow. We were looking to always buy rental properties there and put them in our portfolio. What happened in 2023 was, we bought a lot of properties in 2022, the volume was good, and then 2023 started to dry up a little bit. But we also had money raised from the private capital side, our initial investors, that wanted to still deploy our money with us. And they kept contacting us like, hey, I'm ready to go, when's the next deal? And we kept trying, we kept holding them up like, hey, we'll get a deal soon, just hang tight for a second. So we just had an epiphany, really. We're like, well, you know what? We know people that are still doing deals in other markets and, that we know do good business. Let's start deploying that capital into their deals that we know and like and trust, and we know that deal is nice and secured for our investors. So we started doing that in 2023, June of 2023, and it kind of just blossomed into an actual business where we were, doing, private loans for real estate investors. From the initial raised capital that we had to deploy in our past projects. So I think we did about, $4 million in loans in 23, around there. And we're looking to, double that plus this year, hopefully. And that's pretty much it. We kind of just fell into it. We never really thought we wanted to have, a lending business, but now we see the benefits of it. We see the growth potential, the exposure it gives us, and the opportunities. So that's pretty much it.
That's pretty much it. So as far as future plans, future projections with what you're trying to do with the lending side of it and how that ties into everything else, what's that look like?
So ultimately, our goal is to, we started a fund.
Stop that speaker. I can't stop it.
So ultimately, we started a fund where we're pulling the money together and deploying it into people's real estate projects. So ultimately, we want to grow that into a $50 million plus fund. So that's our goal. We're looking to raise capital now to grow that. And really, what we want to do is we want to have one side of the fund really be, keep the private lending going. Originate those loans and continue our base of borrowers that way. And we also we want to get into commercial projects where kind of like we're investing as like an LP or a GP. So that's a limited partnership or general partnership into that deal where like we have the capital to deploy into that, and that's like kind of like the equity that we get into those types of projects. So find good operators that do projects like that. And that's like eventually kind of like the hybrid model that we want like for our fund. Yeah.
So there's two different types or groups of people that you're trying to find and build relationships and build business with right
Correct.
now. And one side of that is people that want to put money into and get a return on
Yes.
their money. And
Yep,
then there's
correct.
the other side where you're just looking
Like
for
active
good
real estate.
operators.
Yeah, correct. Yeah. So like Drew said, the one side is basically like, good avatars, like just someone that has like cash on the sideline or like, an old 401k or self-directed IRA that just wants to, deploy that money and get a good stable return. And then we can provide that for them. And then the other side is obviously good operators, good borrowers that, are active real estate investors that do fix and flips, BRRRRs, those types of projects. And those are what we're looking to, do loans with.
So real quick, share some of the gems, because everybody in this room, I'm sure to some capacity,
Yeah.
wants to or should be raising some form of private money for themselves. So where do you find those people?
Yeah. The biggest thing I would say for that is it's always closer than you think, like around you. So it's like really starting conversations with people that you have good relationships with. That's how me and Josh got started. And that's really, really honestly, we've raised most of our initial capital for our deals and then the loans that we're originating right now. So it's closer than you think. Have conversations with friends and family. If it's not them, they might know someone, and that's where you start. Other than that, it's really just, I'm sure a lot of people have heard this, but like if you have that good deal, like the money will find you. Like and it's really true in today's market because the low inventory market that we're in, how hard it is to find those deals. Like I just think that is true in itself. Like if you're just willing to, put the effort in to find that good deal and like the numbers like pinch out, like you won't have trouble finding that money. So.
Totally agree.
Yeah.
So real quick, jump over to Gary. And so I wanted to not just have one perspective and one lender, because everybody in this room either needs money or is looking for better funding or a better relationship with a lender that's easier to fund on draws, on renovations, or whatever it is. So having multiple perspectives is a wonderful thing, and Gary has also done business with us in the past for our buyers. So would love to hear, from the beginning of your lending journey.
Cool. So I'm a broker. I work with nationwide lenders and then support real estate investors all across the country, generating most of my business through social media. I did my first loan in Drew's office up in media, and that was a harrowing experience. I met the guy through the Facebook comments, responded back, we went back and forth, and then eventually that deal fizzled. But it lit a fire knowing that I could make something happen just from the organic relationship with people online. And so from there, it was just trial and error and building up a reputation, connecting with people, treating people right, doing business the right way. And then now it's a blend of referral business and the new stuff that comes in from social media. But the core of what I do is really, it boils down to helping people fill out the applications for the nationwide lenders and earning a broker fee as a part of that. But the consistent experience that I like to provide people is just like, you're gonna get like a boyfriend for a few weeks while we go to closing. You're always gonna have updates on your file. I'll be able to handle most of the the third-party paperwork, collecting all that, making sure that it's kosher and getting in through underwriting and not having any unanticipated issues with that. How many of you guys have actually gone to a bank and tried to get a loan before? Right. So everyone goes to the bank, tries to get a loan. There's a lot of paperwork that's involved with that, right? Like they want to have tax returns, they want to have months worth of bank statements, they want to have a seasoned business, or if you're trying to refinance, you have a seasoned property. Well, the nationwide lenders that I work with are more of the non-QM lenders. They're light docs. They're not focused on you as an individual as a borrower, more so the deal. Personal credit is important, but it's more of a showing these lenders that don't know you on a personal basis that you can pay your bills and get a job done. A lot of business that I do does work with newbies. So if you guys have people that you're running into that haven't done a deal yet, or they're looking to do their first, second, third deal and are having trouble building up that track record to go turn over to a private lender, that's the avatar that I would be able to work with. So it's a little bit about who I am and what I do.
Perfect. So you kind of touched on it there, Gary. What does that first outreach that somebody, like, what stage should someone already be at when they reach out to you?
So
like, should they already have a deal, or when they just start hunting, or what?
It's a mixed bag, because I'll have a conversation with anybody. It's rude to say I'm not going to talk to you because you don't have a deal. But protecting my time a little bit, it's more about, are you focused on making an investment in real estate? Are you looking to do this as a business, or do you need to do this on the side? Because if you're doing it on the side, it's a different conversation than, hey, I'm looking to be a full-time real estate investor. I'm looking to flip 10 houses a year to start and then scale up from there. It's a totally different conversation to have.
Perfect. How about you, Alex? If somebody reaches out to you, what stage should they be at in the hunting process?
The initial conversation, if like they want to, like, you know, explore our options for lending, is, you know, you don't have to have a deal under contract. We have a conversation like, hey, you know, this is our terms, this is usually what we require from you, and that's usually not a lot. I mean, we don't require a lot from our borrowers. It's just really about the deal in itself. But yeah, I mean, after that, it's like then we're expecting for you to bring us a deal, like, you know, that's under contract, you know, that you're ready to get funding on. So we had the initial conversation like, hey, here's our terms, rates, you know, loan period, all that good stuff that we can offer, and then you go and find that deal, and if you want to use us, great, and if not, then, you know, that's okay too. So that's the initial conversation, and then after that, then, you know, we expect that, you know, for you to email us like, hey, just got this deal under contract, here are the numbers, let me know what you think. And then we do our underwriting process and then kind of tell them like what we're willing to loan, like what number we're willing to loan on that, and then that's pretty much it. And then we go through the origination process.
Perfect.
Yeah.
Obviously, there's a lot of different options when it comes to funding your project, whether it's a flip, rental, or anything in between. So I think it would be fun to watch you guys fight it out at who is better and why people should go with you. No, but seriously, like, let's get into why someone would go the bank route versus the hard money route versus private money route, and just kind of discuss the pros and cons of either or. Gary, you want to take that first?
Yeah, I'll take the stab at the bank one. Someone's going to want to work with a bank when they're bankable and are looking for, and are also able to rate chase at the same time. Mm-hmm. Like, if you're looking at a Meridian who is investment focused, but they're also a bank, when you're a member of their bank, they're going to be able to get you approved for really aggressive interest rates, much lower than what I would be able to do on the long-term side, because they're looking at you on a holistic banking profile. So if you're bankable, you got income, you got assets, you have a solid property, and really only have a few rental properties, then a bank is a good option. If you're looking to churn out burrs, then a alternative non-QM type of institutionalized private lender may be for you for long-term financing, because there's no caps on the number of 30-year loans that you can have, and they'll close in your entity without any personal income verification. So that's kind of the difference there.
Mm-hmm. Yeah. So with to touch more about the bank, it's just for example, like me and Josh had an investor that a borrower that wanted to explore our option, and he never used hard money in his life. Like he only used bank construction loans basically for his fix and flips. So he was kind of like, he was just, we had lunch, we kind of like explained everything. But the reason why he went with us was just because you have to put usually 20-25% down with the bank loans. So I think he had like, 6 or 8 projects going on at that time. So it's like, all right, like his capital's depleted basically. And he's like, hey, like I got this other good deal that I want to buy. I mean, like there's money to be made, but like I don't have the cash to get my normal bank loan with the bank that he works with. So we came in and gave him a more aggressive loan on that flip, and we were able to close more quickly. Our origination process is a lot quicker than like a normal bank, and it was a successful deal. So like that's like where that was an interesting situation that I saw, because I was like, wow, like this guy like never used like private or hard money like at all, and then like he started needing to explore that option because of capital depletion, basically because of the volume of deals he was doing. So that's another thing you got to think about is like, yeah, like Gary said, if you're bankable, great, that's the best terms and rates that you can get. But you gotta make sure that you have the down payment and capital available to like get those loans, because that will go pretty quickly. Me and Gary could probably get loans that like you don't have to put as much down. That will obviously save your cash for either reserves or obviously operating costs. So, yeah.
That's perfect. That's perfect.
Yeah.
To go a little bit deeper into, I don't know, the value side of what you guys both offer, right? So, like you just touched on, really on the private lending side as a whole, like the value and the benefits are flexibility, right?
Yep.
The speed to capital and the personal relationship, right?
Yeah.
Because a lot of what you do is with repeat clients, right?
Yeah. So for us, we value obviously your repeat business coming to us if we start working with you. Honestly, really for us, it's just like really what we want to see is that you're serious. You want to do more business. We see the experience. You're a good operator. And basically, you're bringing deals that, we agree on numbers with. Like, I get the email from whoever it is. I get an email from Steve, who we actually borrowed to. Get the email Steve, like, hey, like, here are the numbers with this property. Let me know what you think. And like, we agree with those numbers, and we're in the same realm. So we know that, he knows what he's talking about. He's a good operator. He has experience in past flips. So those are our ideal clients. It's not saying that we won't lend to a newbie. It's just like we want to know, and trust you to lend to you, because like that's what we value most.
Yep.
That relationship versus just like trying to like turn and burn as many loans as possible. We want to know that like our money is with a good person that has good values and pretty much knows what he's doing with that project.
How's that translate for you, Gary?
So I work with repeat clients as well. It's a different type of repeat client. So I would say that the clients that I'm working with are probably between deals 1 and 10. Once you're done 10 deals, you should have enough savvy to be able to go to a private lender and use your track record as kind of the metric and say, hey, I've been borrowing money at 11, 12, 13%. I'd love to not pay these people that money. Can I pay you the money? And then that's how the conversation can go from there. So I basically help people get prepared for that position as best as possible so that they can, go on with their investing journey. But then there's also some people that just like the process of using commercialized hard money because it's always available. You're not gonna get a text saying, hey, we're out of funds right now. It's there, it's money, it's cheeseburgers and fries. You can depend on it.
So I know that for me, like one of the biggest issues, because I was using bank financing on a lot of my flips early on, and the capital being out became an issue, right? But also the draw process can be challenging. So let's touch on that. Like, what is what is the draw process, and not just the draw process, all the way back to the start of the process, right? Like when somebody submits, Gary, we'll go to you first, because I'm sure from a structural standpoint, there's probably more guidelines in place, right? Like have to fill out this form with your renovation budget, and then what is the draw process like, and everything like that.
That certainly is going to look and smell like a bank when you're working with me, because I'm going to give you templates that are required for the lender that we're working with. So those have to be filled out, not down to the screw, but with enough detail that the underwriters understand that you're going to be adding value to the property, so that they can order either a BPO or some sort of valuation to judge that. Then when comes time post-closing, the draw process, it costs money to get your money. That's the shit sandwich, right? And so it's going to be $150 to $300 depending on the lender that you work with to get access to those. They're going to potentially send an inspector out there to take pictures, or they may trust your pictures and video on email submission and then wire the funds in 3 to 4 days. I would imagine working with a private lender, it's somewhat like, hey, I'll pop by and then I'll send you the funds later.
Yeah, I mean, our process, again, because, you know, the relationship that we build with our borrowers is like a little more intimate than, like, you know, in those aspects. So it's basically like, you know, we outline the draw process, you know, initially, like with closing and everything. And then once they're ready for their, you know, draw, basically, they send us, you know, a video, making sure like the house address is on there and everything, so like we know it's that fucking house. Because you know, like obviously you don't want to get scammed that way. But and then they just take a video. It's like, hey, look, drywall's in, we're ready for paint. You know, we got like this material ready. You know, I'm ready for like, you know, the next draw. And then, like, you know, and then we just wire them the money. So it's like, you know, that's where I guess a value add that we bring, you know, and like really like our value add is just like the easement of, you know, the funding process really is like our biggest value add. Like we're not the cheapest on the block. Like Gary could probably get you a little bit better terms than us, but we could probably close a little bit quicker, and our process is a lot easier. So that's like really the value that we bring like in our company, and that's what we you know, that's our biggest asset really.
That's another perfect question. Like, what is a reasonable time frame? If I come to either of you guys and I say, hey, I have this deal, I have to close in 3 days, what are you going to tell me?
I'm punting it to Alex.
Yeah, because that's on that. Yeah. For us, and you already know this, so we're not at the volume yet where like we just have like excess funds just sitting in our fund account and our escrow account. So it really depends on the timing of like when we're getting capital back from deals that we've already funded. So it could be a yes or a no. That's really just like, it's either or. It's like, you know, I think you even texted me like, you know, a deal that you needed funding for.
And that's why I said
and we were just, and we were,
that just happens.
And we were just like, I was just like, yeah, like, unfortunately, like, we're just tapped out right now. You know, we have all of our funds dispersed into, you know, other projects. So our goal is to get to that level where, you know, we start to not have to turn people down. That to borrowers that, you know, we like, know, and trust, you know, in our initial network. So that's our ultimate goal, you know, for the forthcoming months and year.
I'll push back on it and say, why are you closing in 3 days?
Yeah.
Like, what's up with closing in 3 days? Like, what's happening? So understanding the story helps a little bit, because what I've found, and I think everyone that's done a few deals have found, that like once the wheels are in motion for the train, for a transaction to get done, most nobody wants to get off the train, because we're all trying to get to the finish line.
It's usually someone falls off the train though, like the buyer or the lender, or like that's what happens.
Yeah.
You know, and that's why you're like, oh shit, like the closing date, and I know the seller's not going to extend. I'm in a pickle.
Exactly. Exactly.
So that's what happens.
A reasonable time frame to close for me would be 7 to 10 business days, as like on the short end, and it really depends on the deal at that point. Yeah. So when we're talking about like quick, relatively quick to a retail sale, which is 90 days potentially, you know, so it's relatively quick.
That's very quick.
That's
like,
quick
so you're saying even 7 to 10 is possible for somebody that's never worked with you before?
I don't like to do
No,
that. I'd love
no,
to
I
have.
understand.
I'd love to have a 21-day
Yeah.
journey
just
on
possible.
our first deal, just so that we can get it all dressed up and nice. But if we got to do a rush thing, one, you're going to pay for it. Two, I need 7 to 10 business days just so that I have options for 2 programs.
Yep.
2 weeks.
Perfect. Anybody have any questions you want to throw at these guys?
What is the LTV that you use for your loans?
For me?
Yeah.
So I have programs that go up to 75% loan to ARV. So it depends on your project cost as well. So there's 2 ways that the institutional lenders draw it up. They'll do a loan to cost or they'll do a loan to ARV. So it really depends on the quality of work that you put on the scope of work to see how high that value is going to be and also how tight your budget can be. But in general, it's up to 75% loan to value on the ARV.
Do you pay more if you go up to that level?
So if you max out the guidelines, expect to pay the highest rates and fees. But sometimes that's more important if it's a difference between 10% down and 15% down on a $600,000 deal.
Right.
How about you, Alex? For as far as when you're underwriting a deal, what do you look at for loan to value or anything like that?
Yeah, it depends on the borrower for us. So if they're a repeat client and we've done multiple deals with them, then we'll go up to 75% loan to ARV. If it's a newer person and it's in an area where we're not really sure of and we're not really familiar with the market there, then we'll probably go a little bit lower, probably 70 to 65%. So it is really situationally based. It is deal dependent and the borrower dependent too.
So as a guideline though, so that's the loan to value or loan to ARV side of everything. What about how much do you fund of the purchase price versus the renovation? Some lenders only fund 75% of the purchase, 75% of the renovations. What's that look like?
So that was the difference between the loan to value and the loan to cost lenders. So I work with a loan to cost lender that is max at 85. They can close in 5 days, but you gotta be a little bit more cash liquid to be able to do the deal. Their also caveat is that no appraisal. They're doing a desktop underwrite. They can be flexible with gap lenders or lines of credit being infused as a part of your overall strategy to the closing table. So there's pros and cons to working with a lower loan to value or loan to cost lender because they're positioned so well in the deal, they can be more flexible on other things.
For us, it really. I'm sorry. What was the question again? Sorry.
How much will you fund of the
fund.
purchase
Okay.
price
The purchase
versus
price.
the renovation?
So we'll
Fund
go up to
100%?
So we'll go up to again, it's deal dependent. So if you get a smoking deal, that it's hey, it's 100 grand purchase, 50 grand rehab, and it's worth 300 grand. It's we'll give you the 150 grand.
Because it's under that 70.
Yeah, exactly.
Loan to cost.
Loan to ARV. So we'll go up to 100% of the funds you need. But again, for that you gotta have experience. Repeat borrowers get that.
Smoking deal.
Yeah, and it needs to be a smoking deal. So it's other than that, we'll be okay. Here's and our numbers have to match. So if you send me that your ARV's 300 and I think it's 250, then it's hey man, I'm at here, I'm willing to lend, now only 100 grand, and you got to fund the rehab yourself. So it's it really depends on those aspects, and then obviously some people like that, some people don't, but obviously that's our opinion. Obviously you have opinion of 300, we have opinion 250. We're just not seeing eye to eye. And just go from there.
I'll get my shit in real quick and then I'll piggyback off of that. So I can do 10% down for newbies with great credit in a good market. So as high as 90% loan to purchase I can do. As far as the valuation, that is a bit of the same games getting played with the underwriters as well. So definitely expect that not always is your valuation going to be honored by the underwriters, because they naturally, as lenders, have to be conservative. So there's always the ability to dispute it, but sometimes you just got to pony up a little bit more for closing.
Yeah, exactly.
Who else has questions?
Timeframe, how long is your holding for? Like when you
Our terms are 6 to 9 months. Based on, like, our rate is annualized though. So, but yeah, it's either 6-month loan, 9-month loan, depending of like kind of like how big your project is.
Look at the programs that can do 6 to 12 months typically. There are a couple of 18 and 24-month programs out there, but I don't know why you would want to do a hard money loan for that long. That's a lot.
What if on the other end of the spectrum, Gary, I went to you for a loan, for a hard money loan on a property that I intended to close on and then basically just list on the MLS and resell it? Is there any like minimum durations or a minimum amount that I'm going to end up paying in interest? Or
So there's no renovations that need to be made, or there could be renovations, because that's kind of part of the game playing, and we can do that on a private consult. Okay,
let's do it.
we'll evaluate your deal. But there's a little bit of gameplay in that. Plan for 3 months worth of interest, because there's going to be some prepaids when you close.
That makes sense. That makes sense.
Yeah.
We're 3-month minimum too.
Okay.
I think that's in our net.
Good to know.
Yep,
Good to know.
3-month minimum interest. Because that just makes it worth for our investors and
Yeah, right.
us.
It's gotta
Like,
make
you know,
sense for you as a
yeah.
lender. Yep.
So,
Yeah, so, on basis for myself, I'm working on my second deal, so, like, if I wanted to talk to one of you guys, you know what I mean? I mean, it's a wholesale deal, but once I knock that out, then I'm trying to get myself together, set up, so I can get some, sales under my belt, then come and talk to one of you, you know what I mean?
Figure out a way to get yourself on the operating agreement of a business that's done some deals, so that you can leverage their experience. You're wholesaling?
Yeah.
Connect with your buyers, see if you can work with them on a deal, and they
Yeah.
could potentially add you on
Get
their
it.
operating agreement. You leverage their experience. Maybe they make 100% of the profit. You get your name on title. That way you can
Use that
come
as
to me,
experience.
and then I provide this operating agreement with your name on it, and now you have however many deals experience that entity has, and we can go get you some aggressive pricing.
Gotcha.
I would say the same thing. Yeah, that's a great way to go about it. Yeah.
Same thing with credit too. If you're in around somebody with just bragging about their 800 credit karma, like, yeah, man, let's get that to work, and then just make sure that you're hooking them up by making sure the bills are paid. But
Oh, yeah.
it's you can do the same thing with credit.
What else we got? Any other questions?
What are your fees besides draw fees and rate range?
Well, if you have to ask, I'm sorry, man. No, for me, I can just flat out expect 12% and 3 points is like if we're just meeting on the street and I don't know anything about you, but really 10.5 to 13% is normal. 2 to 3 points is normal. Fees up to 2,500 in fees. I try not to work with that lender so much.
And we're 12% and 3 points too as well. So
See?
that's
Same thing.
non-negotiable.
more deals, say you got like 30 to 40 deals under your belt, can you get better pricing? Can you get better lower down payments?
That goes to the earlier conversation. You probably wouldn't want to work with me. You would want to either go direct, because I'm just adding a fee on there, or adding a barrier in the way. You're probably way more prepared than the options that I could provide for you.
We're your lender, Steve. Okay. What are you trying to? What are you trying to
money
out
out
here?
there. Don't have
Where are you
enough
trying to fucking slide here? It's true.
Let's get these guys
That's
some more
funny.
capital. Anything else, guys?
Monthly payments?
Yes,
Great question.
there are monthly payments.
That's it. Period.
Interest only?
Yeah, for the most part, on the hard money, it's interest only. Yeah. I've yet to run into a program where there would be principal, because these things are out on the street for 6 to 9 months. They want to make their money, and they're not really making all that much money on the interest anyway. If you break it down, 12% is 1% per month of the loan amount. So if you're in a deal 3 to 6 months, you paid 3 to 6%. So they're making money on the origination fees, processing fees that they can put in there. They're trying to get it back and then send it out again. So that's why they don't care about the principal paid out so much.
So to help your lending business, I find somebody who, has big money. How do I, one, introduce them to you? Two, how do I speak highly of entry fees and how's that, or do you guys just run with that and I just do an introduction? How does that work?
What do you mean by entry fees?
Let's just say, can you go in at 25K or do you have to have a normal 125K?
Yeah, gotcha. Yeah, so yeah, I would say the introduction is great. I mean, we can tell you like a little bit about our fund if you want to like kind of put like some precedence with your conversation, information. But I would say, yeah, like our minimum on our documents is $100,000, but we have the ability to go lower than that if we so choose. I gotta watch what I say too, because we can't generally solicit the fund. So.
Yeah, I'm just trying to see how
Yeah.
I can make a connection for you when I talk to somebody who says, hey,
Correct, yeah.
I'm making X, Y, and Z with
Yeah.
this. I need to
And just like if you guys know someone, like we're not able to compensate directly for referrals for the fund, but that's not to say that we can have like a conversation to talk about how it can be a win-win scenario for each of us.
So I'm not sure if you covered, are you lending in IRAs or like non-qualified versus qualified funds?
Do you mean like that we can invest someone's IRA into our
Right,
fund?
so if
Yeah.
someone rolled in, okay.
Yeah. We just like with the IRA, you have to roll it into a self-directed IRA first.
Right.
With a company. We work with a couple of them. So that's the only thing you have to do first, and then that allows you to be able to invest into funds like ours with that capital. Yeah. Yep.
Perfect. Any other questions?
3 points. Is it upfront, the 3 points?
Yep. Yeah, it's at the initial closing table when you purchase the property. Yeah.
Okay. And separate, the IRA, if we were to use our self-directed IRA to invest,
Are you gonna ask like
What
what
are you paying?
Yeah.
Is that the question?
Yeah.
What would you
Yeah.
get paid?
what do you?
We'll have a separate conversation. Again, I can't generally
Yeah.
solicit to the group, but yeah, we'll talk. Yeah. There you go.
So I feel like what we talked mostly about like bridge lending, and Alex, maybe you can't talk to this too much, but Gary, right? Like you also do the DSCR loans for people that want to just buy a rental property that might not even need rehab, right? So can you talk to that a little bit?
Sure. So the DSCR loan, I think, is a perfect product for the BRRRR strategy because there's no cap on the number of loans that you can have outstanding as a 30-year loan. And most of the lenders that I work with offer both the fix and flip loan and the DSCR loan. So getting an easy process and being able to refinance in 90 days, if you can manage the project effectively, that's where you can do the BRRRR. Quite frankly, I'll be honest, the DSCR purchase is probably not the best play because you're still bringing 20 to 25% down, you're getting a higher interest rate, you're paying points. So if you're looking at conventional financing, even if it's somehow through your LLC, that may be able to get you better cash flow. Plus, the DSCR loan is underwritten based off of cash flow. So as a refinance where you already own the property and it's between getting cash out or just paying off your hard money, the DSCR loan really does well because it's underwritten based off of the cash flow, and they want a good loan out there and you want a good loan product on your property. So that's where I would say that is. But preparation for that, closing an LLC, 3 months worth of bank statements, preferred that the property's rent ready and occupied. It can be vacant, but just with the intention of being rented. And reserves are important as well. So not so much for the refinance, but for a purchase, definitely having the down payment, the closing costs, and some reserves helps get your loan approved for sure.
Perfect. Any other questions before we wrap it here? All right. Well, I want to thank everybody for coming out. You can hang out as long as you want. Let's thank these guys. And real quick, if anybody wants to find you guys, how can they reach you?
Martyn and Gary on TikTok and Instagram, Gary Brown on Facebook.
All right.
That's it.
Love it. Love it.
Yeah, I guess what I can say now, SBG Capital on Instagram. You could reach us there, or just come up to me and we can exchange numbers too. That's just what I just do with the Connect.
Awesome. Thanks so
All
much,
right.
guys. Again.
Thanks.